A lot of investors are looking for the revolutionary artificial intelligence stock that they can benefit from. And one company that has ripped higher this year is C3.AI. A lot of folks wondering, is this going to be the beneficiary of artificial intelligence? Up over 150% year to date. What do they do? We'll talk about that, as well as my thoughts about C3.AI in this video, if they're the winner going forward. If you enjoy educational investment videos, looking for compelling companies, the types of companies that can go up hundreds or even thousands of percent over time, please make a point of hitting that subscribe button. So let's dive right in to understand, well, what's going on here with C3.AI? Well, if you actually want to know the full story, I have a bit of a history with C3.AI. You can look it up here on YouTube. I did a prior video the day before they went public. Then I did another video the day after they went public at an egregious valuation, calling out huge downside. There's more to the story there, where I ended up buying a little bit of the stock. I bought a teaser position after it dropped about 70%, and I thought there'd be more. They were growing at 40%. They announced a huge, customer contract win. And I call out my journey to my subscribers at unrivaledinvesting.com, what I'm buying and selling. C3.AI did not work out for me as a teaser. It subsequently, continued to decline. And we're going to talk about their results. What do I think about their performance now? Did I just whiff it? What's going on with C3.AI business, looking at the fundamentals? Because I did previously sort of nail right when they IPO'd, but subsequently when I bought a teaser position, didn't work out. For full disclosure, the subscribers at unrivaledinvesting.com, they have the full, call out in terms of what I'm buying and selling, and, my thoughts on my own personal investment portfolio. But part of the reason why the stock has rallied so significantly is because they're actively embracing, trying to partner with OpenAI's ChatGPT. They talked about integrating generative AI into their platform. This was the beginning of February. Then and this is, keep in mind, this is even on their website. They're calling this out. Okay, so here's Tom Siebel, the founder, why the company's stock jumped. He's adding fuel to the fire, talking about, oh yes, the ChatGPT fueled stock jump, why it's important. And so you look at, not only this excitement, this hype cycle that they're benefiting from, but they also jumped over 30% following their earnings today. So were they great earnings? Well, let's understand that picture. Well, management provided a lot of different data points here. So the quick, if I were to spell it out from a bullet point perspective, the first is macro is much better than where they saw it was about 6 to 9 months ago. Previously, they were looking at declines. Now they're expecting it to be much better. You're seeing optimism. A lot more businesses are looking to embrace AI. Okay, so that's favorable for them. They're also saying, hey, yeah, we're unprofitable now. And this is the second really core point. We're unprofitable now, but we expect in the near future we could become cash flow break even or positive, within the next, let's say, year or two. So that's a big deal, sort of a change in terms of the mentality that investors might have with this type of company. Because when you can get cash at, getting 4% plus, I personally keep my cash at Interactive Brokers, link below, which is a lot higher than most banks out there, that 4%. You're going to see these unprofitable companies saying, oh, snap, we either need to deliver incredible growth or prove that we're going to be getting to profitability soon in order for us to be enticing, because cash is actually, you're getting paid to wait in this environment. That's a really important data point. And so then what is part of this, this hype is this perception, and management called it out as a breakthrough, where you're combining, this natural language processing model, overlaying it with the exclusive data that they're getting by partnering with certain companies. And their view is it is a breakthrough, not necessarily with chat with what they're doing, but what they're trying to do is become enterprise search. So the way to think about that is you Google everything you want from a search perspective, but what if you're an employee and you're sort of saying, well, I want to understand these analytic trends in this business and maybe where it goes going forward? Because a big element of what C3.AI does is they're not necessarily focused on what happened in the past. They're taking the data from the past and aggregating it from many different players in, let's say, a fixed industry like oil. And then they'll say, okay, based on all this data, we're going to try to give you projections on, let's say, when you might need to resurface an oil rig. And we'll give you better insights on when something will break down. And that's the predictive element in terms of what they're doing. And if you can overlay that with a chat-based algorithm where you can say, okay, tell me which rig is problematic, and it can tell, and say, here's the data, and make it much more engaging. It's starting to turn into like a Minority Report type of thing. It's exciting, bringing both the predictive element and talking to it. So, I mean, there is this there is very much a hype excitement to it. And I do think that there is some sort of breakthrough here. I'm not necessarily sure that it's just going to be, from C3.AI. I mean, they're partnering with OpenAI. That's, one of the language, processing models that's available right now. I mean, I suspect there's going to be a lot of other players out there, but, they're talking about taking this data from things like Snowflake, Salesforce, SAP, Workday. Well, aren't these companies going to directly integrate OpenAI stuff or other chat algorithms in the future? Couldn't that sort of render C3.AI's additional value proposition sort of null? How does that sort of play out over time? Well, okay, so maybe they're giving, maybe they have solid fundamentals. Yeah, everyone's focused on the hype of AI, but let's break this down to fundamentals, because that's what this channel's all about. I'm focused on the steak. A lot of folks are focused on the sizzle. I want to say, well, where's this company actually going, driven based on sales and profits and growth? So what are we seeing right now from a fundamental perspective? And most recent quarter, their revenue declined by 4 or 5%. Year ago, it was growing over 40%. So this is a big change. This is a big disappointment from where they are. Okay, so what's going on here? That's ugly fundamentals, folks. Well, so management goes, wait. You can't ding us because we've shifted to a consumption-based revenue model. I personally, when I saw that was pretty much the end for my own personal thesis, because they were previously growing at 40%, and then they announced, and they had this big customer contract win, and then they said, oh yeah, we got to restructure our sales force. We got to restructure how we're selling things. And by the way, we're burning a lot more cash than we previously said, because previously we said we were break even. So at that point, I was like, okay, I'm not interested in this story because you're not executing. And they're saying, hey, we needed to switch to a consumption model because longer term that'll be favorable and it'll be easier for us to sell our software that way. My personal view is, if you have to completely change your business model, does that mean you still haven't figured out product market fit? And I suspect at this point, they're sort of grasping at straws to try to figure out, okay, where can we get that growth? Where can we prove it? Because they're still not there yet. They'll announce all the partnerships with Google and Amazon and Accenture, and look at all these great partnerships, but show me the revenue. Show me the growth, because right now you're still not delivering it. Now they're saying, well, wait a second, consumption model versus subscription model, you're going to have this initial dip. Okay, let's see it. That means within a few quarters, it should be noticeable that it's picking up. So I want to see that revenue growth. And by the way, okay, so up 30%, your profits must be much better. No, you're still cash burning. Your cash balance is still, dropping straight down. Management thinks it'll bottom out closer to 700 million. It was closer to, like $1 billion, within the last year or so. So actively burning money, unprofitable business model. Okay, so they must have great guidance. Wrong again. The next quarter, they're expecting effectively down slightly, break even. For the full year, they're expecting 4 to 5% growth. So really nothing when you factor in, fourth quarter, really that's not very compelling. That's the restructuring of their business model. Okay, so what are my thoughts on C3.AI going forward? Where does it go from a valuation perspective? First, full disclosure, this is not financial advice. When I look at C3.AI, think about their valuation personally, the type of companies that I'm calling out to my subscribers at unrivaledinvesting.com, I try to find things that are much, much better than what you're about to see when you look at C3.AI. I'm trying to find the things like this past week, I was called out in my investment thing, things that are going to get you thinking. Like this past week was, one of Warren Buffett's top holdings trading at 6 times earnings. That should get you thinking, like, unless earnings absolutely collapses, like that type of stock could do very well in the future. So you just need to think about, like, what certainty do you have on that, and thinking about that element. So that's the type of value proposition that I'm trying to bring to my subscribers at unrivaledinvesting.com. I encourage you to check it out, plus the community for the annual subscribers on Discord where we interact. But looking at C3.AI, looking at their current valuation, I'm thinking, year to date, they're probably growing closer to 5%, for the year, maybe growing closer to 5%. We'll see. I'm giving them more than benefit of the doubt, saying 5 to 10%. We'll see how that shakes out. A lot of folks are going to say, my market cap figure is wrong. I have a course on an educational course on how to read financial statements. and how to learn how to value companies. I'd recommend you check those courses out if you don't know how to calculate the market cap, because what you see on Yahoo Finance isn't correct. Same with, a lot of other financial outlets. You need to be able to check this out. And the reality is their market cap is closer to $4 billion. And so looking at these data points, I'm assuming profit margins nowhere near where they currently are and better than what management targets. Management says 20% plus. I'm saying, mid 20s at least in my base case. And this business is currently valued at, a mid-teens sales, forward sales multiple, for this year. I mean, that's pretty incredible. And so then, okay, so what growth do you think you're going to get in the years ahead? So this is, I honestly, after seeing how they completely mucked up, their previous growth, like they're previously growing 40%, and now it's a monster contract, and then growth decelerates significantly. That means like they have big problems with execution if that's happening. And so in my opinion, they're still in the penalty box. I need to see them execute before I consider buying. And so I'm not the type that gets on the hype train. I'll get on a train when they're delivering. I'm all aboard, baby. Woo woo. I'm all aboard when someone's delivering. But when this is just like, oh yeah, we're integrating this new super cool chat and it's gonna become a breakthrough and enterprise search, that's 100% sizzle, no steak. I love my steaks. Classic ribeye is what I'm looking for, and that's not what I'm seeing here. I'm seeing froth, and I'm seeing what type of multiple assumptions do you have to get an attractive return. Keep in mind, this is a hypothetical valuation framework. Stock price can go way higher, way lower, depending on fundamentals, depending on sentiment. But if they deliver 20% annual growth, which they're not at, if they get close to 30% margins, which they're nowhere near, and if they're valued at 25 times earnings 5 years from now, you'll still lose money over the next 5 years. That's just not compelling at all. I think you'll find something more compelling at unrivaledinvesting.com, where I call out in a very, I have a weekly letter calling out to my subscribers like, hey, what am I buying and selling and what am I looking at? I just don't find this compelling right now. Honestly, if you were to say, Daniel, back when I was at a hedge fund, the founder used to say, Daniel, let's imagine putting a gun to your head, buy, sell, or hold. If you were to force that sort of exercise with me right now, I would say I would expect this to possibly lose 50% sooner than it makes 50%. That would be my, just based on like looking at this fundamental setup. Now it's possible the hype train just takes over. I mean, people were bidding up, I think Bed Bath, as they were, as they're saying we're effectively insolvent. So, you never know how far madness can go, but count me out at this point. And, I look forward to the comments like, have fun staying poor, Daniel. You know what? I got to live the journey that I'm comfortable with, where I'm finding the things that I think are compelling that I can ride long term. And if I see management that isn't executing, it's not for me. Now, could they execute in the future? Absolutely. Do I think AI has a lot of potential? Absolutely. And C3.AI has potential, but I need to see execution, and they've solidly whiffed so far. So let's see. And I could reassess it, in the future if they start delivering. We'll see. If you enjoyed this educational video talking about C3.AI, talking about AI stock, is this potentially the best AI stock out there? I don't think so. I think there's probably going to be a better one within the next few years that I can, sort of focus on, say this is going to be the thing to ride in the future, which I'd call out to my subscribers at unrivaledinvesting.com. Thanks so much for tuning in. Please make a point of hitting that subscribe button. Thanks so much.